With such low volatility in the market lately, a lot of people are starting to realize that the only real way to make money right now is to day trade. If you're focusing on higher time frames, most of your time is spent waiting for key levels to break. And what we're seeing happen right now is that key levels break and the retest fails, and we just end up back in the same range. So it's leaving people who prefer to trade trends on higher time frames without really too much opportunity. And this is why, if we want to be able to exploit this current market, we need to be able to drop down in time frames to be able to make any consistent profits at all. This is why I am currently a day trader. I want to make money from the market, and that means that I have to adapt to what the market is giving me. And right now, it's not giving me much. And so that means my only choice is to exploit the smaller time frames. But a lot of people think that smaller time frames means less profit. It's absolutely not true. In fact, it usually means a hell of a lot more money in a shorter space of time if you can get it right. So today I'm going to take you through my entire charting process that I do at the start of every week to set me up for day trading for the rest of that week. If that's the kind of content that you're interested in, be sure to smash that like button, hit subscribe if you're not already subscribed. And now let's get into this video. So I have got here a completely bare chart because I'm starting right from scratch with you guys to show you absolutely everything I do. This is my Sunday ritual. I make it a habit to do this before before the market opens each week. So on today's show, we're actually going to do this together. What I start with on the daily time frame is zoom out as much as I need to zoom out to find the last peak formation low and the last peak formation high. So once I have that, this becomes the area of interest that I'm really interested in seeing, whether I can count my rises, my drops, do I see W's, M's, all that sort of stuff. It is trickier to identify these things on higher time frames. But at the end of the day, what we know so far is that this right here is a W formation. This is all played out because this is rise 1 here with the retrace. This is rise 2 with a retrace, and this was rise 3. So to be very, very clear, there is only one pattern that I trade, and I'm always looking for the exact same thing. It's usually a weekend consolidation for day trading. That will follow either an M or W. Let's just, in this case, say a W formation. W formation, the second peak will have a higher low usually, and that will lead us into 3 rises. That usually takes us to around the middle of the week. Once that happens, I'm looking for the trend to reverse, usually based off a news event, and that will form the M formation, which is essentially the opposite of the W, where we have one peak and the second peak follows a lower high, which then leads into 3 levels of drop that take me back into the weekend trap. This right here is the only pattern that I trade, and it will usually play out on a weekly basis. However, I'm looking for this pattern on whatever time frame it's presenting. The higher time frame that it is presenting just means that it's going to take longer to play out, and that is what determines whether or not I'm a day trader this week, a swing trader, a position trader, or whatever I'm doing. So when you keep that pattern in mind, and we now look at the daily time frame, you can identify that right here. As I showed you, the W, the retrace, the rise, the retrace, the rise. So this is then where I would start looking for that reversal pattern. And over here, when we're looking at this position, it played out a little bit differently sometimes. And the thing to note about these pivots here that happen where we should see a W and where we should see an M is that there are also other patterns that can form that present as a reversal pattern. So it's not always going to be a W, and it's not always going to be an M. Unfortunately, it takes too long for me to show you all of the reversal patterns in one go. So what I'm going to say to you at this point in time is trust me that this was a reversal pattern. One day I'll get into that, but for the sake of this video, I want to do my whole charting process. So from this point here, I can see that that was a peak formation. And now it's clear that I've had a drop level 1 at the very least, because this whole move here has dropped the 50 EMA. The next thing I'm looking for is to see if we fail the 50 EMA retest, which at this point in time we have. So now that makes my chart mean that if I were to have a look at the daily time frame, the first thing I'm going to do is just pay attention to where price is in relation to the EMAs and count my levels. So far, I can count that my 3 levels have played out, and I'm potentially in a drop level 1. It depends on how dramatic this is going to get. If price was to break back above the 50 EMA, I would need to reassess how I've counted those drops. And I'll tell you why, because when I zoom in on this area right here, one rule about the levels, the rises and the drops, is that the level 1 will break the 50 EMA with volume. And when I say with volume, if you're using the same candles as me, which is the PVSRA candles, then your candle that breaks the 50 EMA should be either red or green, depending on what direction it breaks. It can also be magenta or blue. So in this case, you can see that this red candle right here that broke the 50 EMA, that would technically count as a drop level 1, meaning this whole move down here was drop level 1 potentially. Then we go into sideways consolidation, and then this here could be drop level 2. This here was a horrible looking retrace potentially, because this was based off a news event. But then we had this magenta candle that took us into the second side. This could all be drop level 3. The reason we're unclear about this right now is because we haven't shifted out to create a new trend. So at this point in time, we don't actually know if all of this is actually only one drop. That this can happen, guys. Like, you're not always going to be certain about what level you're in. That's why there are other things that we bring into this particular strategy to help give us some clarity. So at this particular time, at this point in my charting process, it is normal for me to not have clarity. It's normal for me to go, okay, that might be drop 1, it might be drop 3, I'm not sure. I don't have enough information yet. So if you're trying to follow the same charting process and you're getting stopped at trying to count your levels, don't just stop there and say you're confused. Move on, because the picture will get painted the more you move on with how you do this analysis. So the key thing that I'm trying to identify here on the daily is, where am I in relation to the levels if they're clear? And if they're not clear, where am I in relation to the EMAs, which I already discussed, where the price has failed to break above the 50 EMA at this point in time? And then finally, where am I in relation to unrecovered vectors? So an unrecovered vector is one of the red, green, magenta, or blue candles where price has not yet returned and fully closed. So it can return with a wick, but we want to see a full body candle close. So on this particular candle right here, I would then draw out my area of interest. Let me just move this. I would draw out my area of interest from this candle close right here to above, to the top of that candle, because this is the area that is considered unrecovered. From there, I would just mark that as an area of interest. And so if price were to push up, before I would turn bullish, I would need to see what happens in this zone. It's not necessarily a zone where I'm looking to take a trade. It's a zone where I'm looking to assess what price is doing when it gets there, because if it looks strong, great, then let it break. I'm looking for a retest and I'm turning bullish again. If it looks weak, no problem. I'm looking for it to break down, change market structure, and then I'm looking for shorts. So I've got my area of interest above price. I also then need to do the exact same process below price. So at this point in time, this green vector candle right here is the most recent unrecovered vector candle that price has not yet returned to. So that becomes my area of interest below price. Now, sometimes I can zoom out and see if there's anything more interesting going on, because sometimes by looking at this, I can get an idea of whether or not I need to be really strong and on my game because a big move is coming, or it's likely we're going to consolidate for a period of time. So when I zoom out and look at this, here's the thing. I've said this to you guys before. If you've never watched me before, you would not have heard this. There's a pattern I always repeat. Look, this gives the perfect example. This is what I always repeat to you guys. When price moves up fast, it's going to return down fast. After that, it will move into consolidation. The reason for this is because of imbalances that are caused in the chart, or sorry, in the order books when price moves fast. So this price moves fast up, it clears out the order books. And that means that there's a space there now. A lot of people call it imbalance, but there's a space. There's no buys and sells there. So as soon as price gets back into that zone, it has the opportunity to move fast back the other way. And if you can identify that that has a potential of happening, you can get into shorts anywhere along here and take advantage of that fast move down to the downside, with your target just being back at a previous area of support or what resistance if it's to the upside. So now we can see here, fast up, fast down, consolidate to rebalance. That's what's happening with the price right now. So I want these fast moves, right? Like I want to catch them. I want to be in before they happen. I don't want to be trying to market sell down here and then I end up with my average entry at the bottom of this wick and then I'm stuck in a consolidating trade that actually goes nowhere. I want to be in here before it happens, or here on any of these before it happens. So that means I have to have a look, zoom out, see where's the potential of that happening. So if I zoom out now on the current price action, I can see that I've got a lot of consolidation here. I've got this level here that acted as support, but I've got this massive imbalance here as well. That means if price were to break down below this support at around about $25,000, that should be a big fast trade back down to around the 20,150 area. So I'm looking to see now if price starts to reject, if it continues to reject on smaller timeframes, I want to get myself into a really good short position just in case it does happen to break this level, and I'll hit my target very fast if it does because of the big imbalance. So that's on a higher time frame, something I'm keeping an eye out for, but also I'm keeping an eye out to see, you know, if price can get back above the EMAs, then it's likely they're going to leave that behind for now. They will come back for it eventually, but it might not be this week thing or a this month thing kind of deal. So just keeping an eye out on what do I think the big trade is going to be. I call it a Linda trade. I'll explain why another day, but that would be a case of a Linda trade if price were to break this level. So I'm going to keep that in the back of my mind as I move on to do my analysis. So on the daily time frame, I really don't need to spend a lot of time. I'm counting my levels. I'm looking at where price is in relation to the EMAs, and then I'm marking my areas of interest. Another thing that I would do here at this level is, sorry, I will turn to the big time frame heat map here, and I'm going to mark out where the high levels of liquidity are, because if they happen to line up with any unrecovered vector candle, that's likely going to be a target once a direction is chosen at some point, whether it's next week or the week after. But I want to know where these high levels are. So I'm looking for the yellow areas on this high block chart, and immediately I can see that 28,300 is a key area above price, and so is 27,600. So both of those get marked on my chart here, 28,300. And see how that's fallen right within the area of interest? Like I didn't know that beforehand, right? So this is all just adding confluence to that being my zone to pay attention to what happens if price can get back in there. What was the other one? 27,600 is not as important, but it's still there. So I'm going to add that one as well. Hold on a second. So 27,600. Okay, and so now I've got these two areas of interest that are, or two liquidation levels that kind of form my area of interest, because even the 27,600, if I zoom in on that for you guys, see how it falls just below the area that I've marked. So these are very, very important levels to me that I want to see what price does should we happen to get there. Now I'm going to do exactly the same thing to the downside. So the best I can see to the bottom is 24,800. There's really not anything that's really standing out to me below that. There are some, but this one's got my most interest because it's the brightest colored one below price. So 24,800 is going to get added. 24,800. And now what I want to do, once I've done all of those markings, see, that's going to show there. If we get to that, it's going to break that level that I just spoke about. And then we could actually come down for these lower ones, because now we've got 23.4 and 20,800, which I've actually spoken to you guys a fair bit on this channel. So where does that take us? That takes us into this imbalance. I won't mark them now, but just know that there are those two levels there that would very swiftly come into this zone that I told you was the area of interest should we break down. So now once I have this marked on my daily chart, it's a matter of just deciding what do I want to be shown as I go down in timeframes. And I don't really feel like I need these. So if you just click on whatever you've drawn and go on your three dots, it goes visibility on intervals. And I just changed that to current interval only. So these two areas of interest, I'm not really interested as I go down in timeframes. So those will go on current intervals only, but I do want to see the liquidation levels on all timeframes. So I'm going to leave those ones as they are. And now I'm basically done with the daily time frame. I know my counts. I know where I may, like the three levels may already be in. And this here, just to be clear, this here at this point in time, whoops, could be a W formation after those three level drops. But the problem with it right now is that it has not broken the center peak. So what I'm looking for next week is to prove to me that this is a W. What would need to happen is price would need to break right above that, then come back for a retest and create a higher low. Once it's done that, that's when I have a proven W formation. And that's when I get the clarity that says, that was three levels on the daily. That was a three-level drop on the daily, not the potential whole thing just being one drop. So see how you don't necessarily know in the moment 100% certainty how many levels you have until you actually get that stopping volume candle that forms the first peak, which this right here could be it. That is your one hint that goes potential change in trend coming. Then the trend gets confirmed when you form a W formation and that W breaks out and retests. Anything you do beforehand is in anticipation of that happening. And that's okay, because that just means you're an aggressive trader. So you would believe right now that this is a W, it is going to break out next week and you would already be long. And that's fine. But just know that aggressive traders are probably going to lose more often than they win, but they're going to have a better risk to reward. And that's going to mean that they can still be profitable, even though they're not right all the time. Whereas a confirmation trader will have probably a better win rate, but they may not have a better risk to reward. There's really nothing wrong with either way. It kind of comes down to your own emotions and how aggressive you are and how you can handle losses, really, because losses shouldn't hurt you financially if you have good risk management. It's just an ego thing that makes you feel like maybe you're not good if you lose, but that's not it. Like, nobody can predict the market 100% of the time. We're just making educated guesses at the end of the day. So anyway, this is all that I really need to know on the daily time frame. So I feel clarity about my three-level rises. I don't feel great clarity yet about my drops, waiting for price action to prove to me which one it was. Great. Now I can move down. I'm going to go down to the 4-hour time frame, and I basically am repeating the same process. So when I zoom out on this, immediately what stands out to me is, excuse me, that there is a blue vector candle right here, okay? Immediately. So that becomes my area of interest. Why? Because it's a fast-moving candle that, like I said, price is going to come back there eventually. And I want to know what happens if it does get back into that zone next week, right? Doing exactly the same to the upside. So I can see here is the highest point we've got on the 4-hour time frame. Immediately left, I can see this red vector candle. Let me zoom in on it. So immediately left, I can see this one right here. And that is where price rejected it this week before. So that shows me that there's a lot of liquidity in that candle, because on the first attempt to break through, it failed. So I definitely want to know what is going to happen to price if we return back there. When you are trying to mark out your areas of interest, look, you've got red candle here, here, here. How do you know which one? If you do have a situation where price has tried to return, that really helps you to kind of solidify which one you should be paying attention to, because this is a failure to get back into the zone so far. And that tells us a really big story that we should be waiting to see what happens if it can get back. So far, on the second attempt, it couldn't even get into the zone at all. It created a lower high. So we want to keep that in mind and see, like, if we get a break to the upside, can it get back into that zone? If not, it doesn't really look bullish at all. Same thing I'm going to do on the 4-hour time frame is zoom out as much as I need to look for my peak formation high and low. Very clear that this was the peak formation high, very clear that this was the peak formation low. So now, same thing, let me do my count from the peak formation high. And I can see here that this was a inverted V. This was the 3 hits to the high followed by the inverted V. That is one of the reversal patterns that I said to you is going to replace an M formation, which, you know, there are many of them. So this here is a clear drop, because look at this, exactly what I said to you on the daily time frame. Level 1 will drop the 50 EMA with a volume candle. That is how you confirm that it's level 1 drop. If it breaks the 50 EMA and it's only white and gray candles, that's not level 1 yet. Right? It's so easy. It's a literal strict rule. So this is how you easily get level 1 drop confirmed right there. Level 2 drop, mind you, once it drops, it usually makes a run for the 200 EMA, which is the yellow one on my chart. And we can see here that's what happened. So once it does that, it will either just go sideways, which we call a board meeting, which is what price did here, or it will retrace. And, you know, if you were trading retail pattern and it was to retrace after something like this, then it's going to look like a bear flag, right? So this is where the retail patterns come in, and they will actually play out. If price was to retrace, you'd get a bear flag, you draw your fibs, you'd look for a 61.8 entry or something like that, and bang, like you can be in for level 2 as a typical retail trader. But that's not what happens here. What do you do when it doesn't retrace and it just goes into sideways? When you know this method, you know what to look for, because what will happen is either price retraces back towards the 50 EMA, or it goes sideways and the 50 EMA catches up to price. So we can see here 1 rejection of the 50, 2 rejections of the 50, and then it finally drops through the 200 EMA. So that then confirms to you that that is level 2 drop. So now you're fairly clear on the 4-hour time frame as to what your drops are. And then we end up here going into the final drop, which drops under all of the EMAs, right? So this dropped under every single one. That creates the level 3 drop. Now, when we have a look here, this is, again, let me show you this exact example. Fast move down, fast move up. Why did that fast move happen on that news day? I can't remember what the news was. There was something good that happened on this day, and price just shot up, and everyone just thought, okay, that's it. Like, this is support, and like we're going up forever, and we didn't. Why did that happen? Simply because there was the imbalance here and it hadn't been refilled. So therefore price could move up in a fast fake move. Remember, the fast move is always the fake move. The real move is the real slow trend. That's what you want to be a part of, real slow trends. You don't really want to be part of fast fake moves unless you're a day trader and you know they're coming, which I'll teach you that as we go along, because I do like being part of them. But anyway, so now we have this imbalance, and look, because we didn't consolidate after, we've got another fast move right back down. So until we get into this period of consolidation here, this entire area does not rebalance. It's being rebalanced right now. That's why we've been here in this range for such a long time. And actually, another tool that you can draw on that is this one here. Let me find it here to show you which one it is. I can never find it, but I will find it for you because it's important. Here we go. Fixed range volume profile. So you grab that one and you draw from the top to all of the price action. Wait, I don't have enough price action on my screen, so let me zoom out. So we want to go from the peak formation of the latest move to the low of the latest move and grab all of the current price action within. And now this shows you those imbalances, right? So here, see how you've got like this little divot kind of thing? That was the imbalance that was there. And I guarantee you, before all of this price action played out, all of this was a short kind of like crevice, right? When it pokes out like this is the high volume area. This is where people are happy to transact. They're happy to trade both short and long. And so this is usually where price settles, right? Some people feel that that's a good area to buy. Others feel it's a good area to sell. So price settles, and we call that the point of control, meaning if you're above it, you're bullish. If you're below it, you're bearish. But the point of me showing you this for now is to show where these imbalances are and why we have the fast move as soon as we get to them. So this tool is a great tool for identifying that. And so now we're in that period of consolidation, trying to rebalance this zone. Why do we need to rebalance the zone? Because if we don't, that means every time we get down here, we're going to move fast up to here. Then every time we get here, we're going to move fast down to here. What's going to happen if that keeps happening? Retail traders are going to catch on that they can just long from the bottom and short from the top. And then what happens? Retail traders start making profits. We can't have that. Can't have that. So that's why we go into this consolidation, A, for the market maker to accumulate their own contracts before the next big move, and B, because you just can't win forever. Like you just can't decide that this is the greatest strategy of all time and you just start going 100x longs and shorts from the bottom and the top. So that's where we end up. So now when I have a look at the 4-hour time frame, I feel at this point in time fairly clear on this one. I do feel like I've had my 3-level drops here, and I do feel like this is potentially the W formation, but I do still have the same problem. I'll show you in a second. So I'll draw this out. Now, I don't usually actually draw the M's and W's on my chart, but I just do it for the community so that you guys know what I'm actually looking at. But on my own chart, it wouldn't really be there. But at the end of the day, it's the same rule that I said to you on the daily time frame. What I want to see, if I'm to believe that we're bullish, is I want to see price break the center peak of the W, and that is right here, and that has not happened yet. We have a lower high, in fact, and in fact, look at it, it's a second rejection of the 800 EMA, so it's not actually positive yet. However, could it just be that price is retracing back to build up some steam to then go on for a second rise to the upside? Maybe. But if I have a look at this here on this, if this was all to be a level 1 rise, then I'd have to zoom in to see what happened here. And I really hardly got a break of the 50 EMA. This is the only vector candle that got close to it. That wouldn't really count as a W formation yet. So I really do, on a 4-hour time frame, my thought process right now is that I'm just in a consolidating range to rebalance this area, and there's actually no clear direction right now. And that makes me neutral on a 4-hour time frame, and that's fine. So now I'm going to go down to the 1 hour, and I literally repeat the same process again. There was nothing on the 4-hour that I kind of needed to hide. But now I'm looking at the 1 hour. Now, hello, teacher, your student from Jamaica. Hello, Conroy. What's happening live from Scotland? No way, USA. Awesome. Good to see you guys. So now I'm going to do sorry, let me go back because I don't need those areas of interest on my 1-hour chart. So do the same thing. The visibility on intervals, I'm going to change it to current interval only, because as I go down in time frames, I want my charts to be clean, So down to the 1-hour time frame. Now, when you're on a 1-hour time frame, you don't have to zoom out all that much to find the peak formation. The 1-hour time frame, probably up until the last week that you were in at most. So this here is the current week. This here is last week. How do I know that? By the market session times down here. And you guys should add that to your chart. Just go to the indicators and type in market session times. You can see here buy, trade, travel, chill. Whoops. Why did I click on that? Yeah, here by 𝗪𝗏𝘓𝗪𝗪. That's the one you want to add to your chart, and they're going to pop up when you're on a 1 hour time frame or lower to look like this. So very easily, you don't have to like look at the dates down here or anything. You can just go, okay, here's the one cluster, here's the second cluster. That's about 2 weeks worth of price action. That becomes my area of interest. So now the first thing that I need to do is look for my peak formation high and my peak formation low. Exactly the same process that I did on the daily and that I did on the 4 hour. The thing is if I was able to clearly identify on one of those time frames what level I was in, I wouldn't need to keep going, right? Because if I, for example, let's just say I could see a clear M formation on the 4 hour time frame, and a level 1 drop had played out, but I wasn't in a trade yet, then I would stop at the 4 hour and I would wait for the retracement or the board meeting to get in on a short position to take me down for level 2 and level 3. And that becomes my focus. And that means my trade is going to take a lot longer to play out because it's the 4 hour time frame. I could get myself into a short position that I have to hold for somewhere between 2 to 4 weeks. Right. Whereas at the lower I go down in time frames, if I easily count my levels, then it's a shorter period of time that I have to hold that trade. But at the same time, it will likely, obviously, it will likely play out a lot faster. But I'm probably going to get a better risk to reward because the smaller time frame that you go, the smaller stop loss that you need, because the stopping volume candles become very obvious on smaller time frames. Just to give you an example of that, if I go back to the 4 hour now, look how big the wick was on this stopping volume candle. So let me draw this out. Let's just say we did think that that was a W formation right here. Then, sorry, oh my goodness, click. Here. So let's just say I did think that that was a W formation. Then that's the stopping volume candle right here. The entry is after this blue vector right here. So you have to wait for that candle to close before you get in. So if your entry is here, your stop loss has to go below this wick, right? Because that's where the last people were trapped. So you need to clear that because they may come back to trap more people. So your stop loss would have to clear that. And if you were only going up to, the area of interest, this is only a 1.58 to 1 risk to reward. That's a terrible trade. I tell my community in the TTC Discord, I don't get out of bed for that. Not interested. So it goes to show on the higher time frames, you often will need to have a much wider stop loss because the moves are, fairly large. But then when you go down to, I won't go to the 15 yet because I'm still on the 1 hour, but let's just use the 1 hour as an example if I can find a good trade. Let's go back to here. Okay, as an example, if I had counted my 3 level rises and I identified this right here as an M formation, let me make it clear for you. If I identified that as an M formation because I have a stopping volume candle followed by a railroad track, then I go short at the end of that red candle. My stop loss is just here. And then if I zoom out on what happened prior, I would probably come down into this zone. That's a 2.68 just to there, but that would only be considered that would be my target for a level 1 drop. So knowing that I would probably then have 2 further drops. I mean, look where we actually did end up on this trade. If we went down into this consolidation zone, let's be generous, that's a 10 to 1 risk to reward. That's not unusual in this method. It's not unusual to get your 3-day swing as a 10 to 1 risk to reward. So now tell me that smaller timeframes don't make you money. I've just given you a 10% account return. If you're only risking 1% per trade, I just gave you a 10% account growth in one trade. Whereas on the 4 hour time frame, you were going to get 2% and have to hold it for a month. And this you would have gotten in a week. So massive difference, massive difference. That's why you should be day trading right now, because the more profits you can accumulate, the more money you're going to have to put into the whatever cryptocurrencies you want to buy for the next bull market without actually getting it from your savings or getting it from your job or whatever. It's like free money that you've generated from trading. So anyway, that was a rant that I didn't mean to go on, but that just goes to show the difference. Now I forgot what I was up to. Can someone tell me what process I was up to? That trade is fine. It sure is fine. The vector candle on the 4 hour is blue on my bars. I'm using PVSRA. Are there some different settings? Potentially. So the one that I actually use is a custom indicator that you get when you're part of TTC. If you're considering learning this method in full, like, you should probably just come and join us, because even like this software here, we give you all this data in the Discord. We're sharing these heat maps. All of these things are paid subscription that you would have to pay for separately if you're wanting to learn on your own, but they're all included. Like, you know, we post them for you in the Discord as part of the one subscription. So it's a savings just on that right there, but you get all the education and everything as well. And this custom indicator that we design, you get that if you're one of our members. And so when I say to you to add PVSRA, I'm just telling you to add it if you're not a current member of ours, because it's as close as possible that you can get to the one that we created. So you may not have the exact same candle color. It depends on how the maths behind the volume count is done, but you know, it will be close enough. So anyway, let's go back. I was down to showing you the 1 hour time frame and how we really want to identify our peak formations from at most 2 weeks prior. So zooming in on 2 weeks, I can clearly see this is a peak formation low. I'm also going to note that it created the low of the week in that week. Right, that's an important level, because again, at some point in time, price comes back. The low of the week and the high of the week of the prior week is always the target for the market maker to take out in the next week. Here's the perfect example right here. This here was the high of last week, and look what the market maker did. They came to take it out this week, right? So one of these always becomes the target of the next week. And then once price gets there, it either breaks it and creates a new high or low, or it rejects off it and we stay within the range. So you must know your high and your low of the prior week, and that is simply the lowest point that price went Sunday 5 p.m. New York to Sunday 5 p.m. New York, 7-day period, and the highest point that price went in the same period of time. So what I'm assessing here now in the 1 hour is, I can see my peak formation. I can see that when the new week starts, when the market opens at 5 p.m. New York tonight, this is going to reset and the high of the week is going to move up to here. Hasn't happened yet, obviously. And the low of the week will move up to this one here, right? So what I'm identifying is what's happened so far. I can see a V bottom here. This is clearly rise level 1. Why? Because price broke the 50 EMA right here with the green vector. Do you see how repetitive this is? Like, I know a lot of you guys have been watching me, like people who are new to me on this channel are watching me thinking the method sounds good, but it sounds so complicated. But do you see how so far on every time frame I've done the exact same thing? I'm just looking for my peak formations. I'm looking for where is price in relation to the EMAs, and I'm looking for where are the unrecovered vector candles immediately above and below price. Like, it's as simple as that, you know. But I'm going to add more things now that we're on the 1 hour time frame. So bear with me. So this is clearly a rise level 1. This here could potentially be the rise level 2, because what happened here? Price came back to retest the 50 EMA. I told you that's what happens after it breaks. And then we moved up through here. We had 2 attempts that created the high of the week, maintained the 50 EMA, and then we came up for another attempt up here. So rise 1, rise 2, rise 3. Then we had these levels here that kind of topped out for the week, and we ended up falling away. But what we can see here is very clear. The first 3 days, price rises in 3 levels or 3 days, and price drops in 3 levels or for 3 days. So for the first part of the week, we went up. The second part of the week, we went down. Remember that pattern I showed you? This one here. Wait. This one here. No, that wasn't it, Anastasia. Wait a second. This one here that goes W formation, rise, 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 M formation, drop, 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 sideways trap. What is this? Rise, drop, weekend trap. It's predictable, right? More times than not, you're going to get that. It's just your confidence in taking the reversals when they get there, or taking the triggers when they get there. So here, this is where I'm at now. Now, when I look at the current price action on the 1 hour time frame, I can't see, other than this vector right here, I don't have anything kind of immediately below price. So I'm going to mark out the top one. So this vector candle right here is not yet fully recovered. I can see here, exactly as I showed you on the 4 hour time frame, that there is one attempt to start getting into the zone that rejected. Now I'm also going to take note that it also rejected under the 50 EMA, right? So that becomes my area of interest for the 1 hour time frame. And I'm actually, once I get to the 1 hour, I like to keep the visibility on all time frames below. So on this one, I go current interval and below. So now I've got my area of interest above price. I need to find my area of interest below price. So I have to zoom out until I can find an unrecovered vector. And all along here, there aren't any. So I'm actually coming down. I'm coming down to, wait, hold on. Yeah, no, there aren't any. So I'm coming down to this candle right here. And I'll show you why in a second. So if I mark that one out, guys, I can see you leaving heaps of comments. I will try to answer as much as I can in a second, but I like to just keep it rolling in the meantime. But see here, so now if I zoom out on that, you can see here that price has not yet returned to this one, but between this low to all the way down to that area, there aren't any other unrecovered candles. That's why that one becomes my area of interest, right? So now I've got my area of interest below price and above price. I'm going to try and count my levels from here as well. So I've got, what have I got? This isn't the greatest stopping volume candle because I don't like when price returns. But at the end of the day, we do have a move up here. We have a lower high here. We have this whole thing that's broken the 50 EMA, and currently we're rejecting the 50 and the 200 EMA. So if price were to come for a level 2 drop, that's going to be a decent trade because look how far away the next vector candle is. So if price cannot get back above those 2 EMAs right there, then you are going to have a trade setup that looks something like this. Well, really, you could have your stop loss just above the EMAs if it can't get back into it. What have we got there? A 5-to-1 risk to reward. You just need one more trade for the week. You've made 10% on your account, right? That easy. So now what I want to do on the 1 hour time frame, however, is I want to now know where are the recent areas of liquidity that are going to be the market makers' first target. Like, who are they going to come for first when the market opens? Because it's a weekend and people have been opening trades all weekend. That's why the price is going sideways. We have longs and shorts trapped here. So I need to know where is the highest pool of liquidity above and below price, because I'm looking out for the false move week beginning following this step. So that means I go back to high block now, and this time I'm looking at this chart here. First thing I want to notice is the shorts versus longs. So we've got 311 shorts in the visible range, 153. So that tells me many more people are feeling bearish than they are bullish. So immediately, without doing any TA, without looking at the rest of this chart, I'm like, okay, if everyone's feeling really bearish rather than bullish, it's likely we're going to get a stop hunt to the downside as the false move week beginning, then move up, because we're going to take out those shorts. No, wait, that's not right. False move to the downside to trigger the shorts, but also take out the few who were long, then move up potentially. So now I'm going to have a look at where is the most liquidity and also what is the delta. So the delta down here is 4.7 billion to the shorts. It just proves that more people are short currently than they are long. So I'm looking now on this side here, where is the highest peaks of liquidity, because they're going to be the easiest target, and I want to look at the ones that are closest to price. So above price, I've got 26,775. Guys, if you are enjoying this video, be sure to smash that like button, because this is a long process, but this is going to be the only video you need to chart every week moving forward. Mike Bennett says Annii is the goat. So here, look at this. So the one that I just mentioned to you that was closest to price just happens to be within my area of interest. So now I'm getting multiple confluences. That's the point here, right? So going back to, I would do the same for a few more up, right? I won't do them now because I don't want this video to go for too long. We've already been going for 44 minutes, which is not like me. I don't do long videos. But anyway, so normally I would mark all of these out. Below price, the closest one that I have to price that sticks out is 26,357. But I also have this big one that I want to pay attention to as well. So I'm first going to mark the 23,657, I think it was. 20. No, wait, was that wrong? Let me check it. It was 26,438. What did I say? 26,438. 26,438. And then I'm going to do that big one because that big one is going to be a big target if we move down. So 25,843. 25,843. And that takes us below that actual area of interest. So now I want to see, is there a vector candle around there? There's not. There's just a cluster. So anyway, now this is good. So I've got my area above price, my area below price. Somewhere around these two is where I'm looking to see if false move week beginning takes out one of those. And if it does, what happens once it gets there? Does it change market structure? Because if it does change the market structure, that's the beginning of my 3-day swing. Remember I think I deleted it, but remember my pattern. A false move, for example, into here may follow with the M formation. That gives me my 3-level drops. That gives me my W midweek. That gives me my 3-level rises from the middle of the week into the end of the week, and then traps me back into the weekend, right? So here's how I now set myself up to go, okay, if false move week beginning goes up here, I'm looking for a 3-day move. After it's done, I'm looking for a 3-day move to the downside. If the false move week beginning comes down and takes out this one first, and then gives me a W formation, I'm looking for 3 levels up. Then midweek, I'm looking for an M, and then I'm looking for 3 levels down. Simple as that. This one here, the 3 levels down over 3 days or the 3 levels up over 3 days is likely to give me my 10-to-1 risk to reward on both of those trades, meaning 20% account growth by the end of the week should we get the full 10-to-1 kind of trades. They don't always come. If we have a very tight range, we might only get one of them. If we're lucky, we get both of them. But at the end of the day, that's where I am now. I'm going to do that. I don't really want this area of interest to go down in time frame. So I'm just going to do this one on current only. Now, my final thing is to go down to the 15-minute time frame. This is the part that I normally do with you guys on this show every Sunday. So I'm now just looking at the weekend because now I know where I am on a higher time frame. I'm going from the end of the US price action to where most of the candle closes were to wherever the market's going to open, and which is going to be here. And this becomes my weekend trap box. Where is it? Here we go. Weekend trap, right? So now I'm assessing the price action if I want to catch the false move week beginning, because there's 3 trades that I like to take. I like to get the false move week beginning because it tends to last all of Monday until around the US session. And that can be a good 3-to-1 or 4-to-1 trade. It's just a day trade, right? So that trade, if I can get it tonight, I probably will close it tomorrow. But sometimes the false move week beginning, if they don't need to induce traders, it can lead into the 3-day swing. So that's why I like to get it in case it turns straight into the 3-day swing. So that's the first one I'm looking for. If I get a reversal, if I get the trade, first of all, and then I get a reversal signal around UK or US, then I'm bag flipping that trade the other way, and that becomes my 3-day swing. So that's my second trade of the week. Then I don't have to really look at that trade until around midweek reversal. Midweek reversal usually lines up with a news event. So that's when I would go to what is this thing called? Forex Factory. Yeah, I'm looking at the calendar. And I'm having a look at what news events do I have coming up. I need to know what's potentially coming up on Monday that might affect the market, and then also around Thursday as well. So the only thing I can see here for, is this the right week? Yep, this is the right week. The only thing I can really see, there's consumer confidence on Tuesday. So that could mean that the real trend doesn't start till Tuesday potentially. And then we've got unemployment claims on Thursday. That could be the midweek reversal. But we've also got Fed Chair Powell speaking. And then, oh no, that's a Chinese bank holiday. Who cares? Core PCE price index. So any of these things on Friday could be, but a lot of these would be leading you into the Friday trap. Other conversation, we'll do that another day. So that's it. Once my weekend box is identified, I'm trying to find out who's been trapped so far. And at this point in time, it's not clear yet. I do have one spike below down here. So this would trigger pending shorts. And I mean, I doubt anyone was long in that price action. So longs might be okay, but this could have triggered some shorts, and now prices come back into the range. So they're either super high leverage already liquidated, or the ones who are not that high leverage are currently trapped. So what I'm looking for now is to see, I can see we've had one attempt to push up here. We've had a second attempt here, but these two are equal levels. Look at this, right? So these here and this candle here are equal levels. So nobody's really trapped yet there. So ideally, I would like to see, if price was going to return to this level, that it fails to get as high. It could just be that they trapped people up here and then also came back and trapped them again up here. So it's possible that this weekend trap actually looks something like this. We've got trap traders here, and trap traders here. So what are we looking for now? We're looking for that M or W formation. So if you get this could be the first side of an M, because it's a stopping volume candle. So if you were to get an M formation follow soon, that's going to be the start of your false move week beginning. You would take the trade on the second peak of the M. You would trade that down until UK session, US session tomorrow. Planning to potentially bag flip if you can identify your three levels. If you don't get that second peak formation, there's two things that could happen here. Price could come back into the range and give you a W formation. So keep an eye out on that. Or price could break out of the range now and retest the 200 EMA. Because the only reason it's going to give a W formation or a stop hunt like this is because they need to induce more traders. If they don't need to induce traders, then they will just break the range, because at the end of the day, even though we've got that stopping volume candle, we also have higher lows currently. So, and prices between both EMAs. So for me to take a long position out for false move week beginning, I'd be looking for something like that to get back above the 200 EMA. Or price can come back into the range and give me a W formation somewhere in the range, that maybe this one forms the stop hunt from anyone who's open trades down here. That's it, guys. That's all I've got for you. I hope that I'm so sorry this went so long. The problem with a full charting process is it really does take a long time. So I hope that you guys sat through that whole thing and that it was helpful. And there's only a couple other things I want to tell you quickly. The last thing I would do is have a look at the heat maps. There's nothing on there now, so nothing to talk about. I would also have a look at the sentiment. So I can see here that currently social media is telling me that retail sentiment is bearish. That also lends to the fact that we may get a stop hunt to the downside, then go up, or we may just break the range. And then what else do I want to show you? Oh, I wanted to show you this, guys. If you haven't yet joined the BitGet competition, consider joining our team, because I've put in there a full scalping strategy, which is very different to anything I showed you today. And at this point in time, we have 157 people that have completed the training. You don't have to be part of the paid Discord to do this. You just have to enter the BitGet competition. The link is in the description down below. If you want to jump on my team, make sure you do that, because we're gonna win. And you get this free scalp training, and like, look how many people have done it. They are absolutely killing it. A lot of the guys in the Discord, let me find the thing, are already practicing the method, and you can see their charts here, their wins. Like, they're just going off with this method. They're loving it. I've made it really simple and everything for you guys. And then finally, I wanted to show you, hold on. This is where you find the link to wait, are they there? Wait, the competition links aren't there. Hang on, what have we got here? Join Annii and Ran. Yeah, guys, Rand put his name on my team. So this is the team. Anyway, if you don't have BitGet, get yourself an account and then join the team as well. I'd love to have you guys. And finally, be sure to follow me on Instagram as well. Make sure you choose the right one with the blue tick, because I've just opened the, what is it called? The little chat thing. And wait, let me figure out the name. Sorry, guys. Hang on one second. The name of it is... anyway, you know, it's that little thing where I can give you guys updates and I can get you guys to vote on what you want me to cover on this show. Not threads. It's the other thing. It's like a, oh my Lord, I've forgotten the name. It's like a secret little chat group. But anyway, yeah, you guys can vote on what you want me to cover and you can give feedback on what you'd like me to cover on these shows. So be sure to do that as well. All right, guys, I'm going to leave it there. Have an amazing week. I'm actually ransacking Rand's show tomorrow because he ransacked my team. So I'll see you guys tomorrow.